Hi, and welcome back to the Food Fund, where we analyze investing in food stocks, beverage stocks, and restaurant stocks. If you are new here, our goal is to help you put your money where your mouth is and invest in the best food companies. Is a fan favorite pizza shop a good investment? In this video we will be analyzing if Domino's Pizza stock is a buy. Could Domino's Pizza, stock ticker symbol DPZ, be on the move higher? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. Let's start with some background info on Domino's Pizza. Domino's Pizza was founded in 1960 in Michigan by Tom Monahan. His goal to guarantee fresh, hot pizza delivered in 30 minutes or less was a bold move that revolutionized the pizza delivery game. In addition to awesome pizza, the company offers pasta, chicken wings, bread sides, and even desserts. Today, the company has grown to over 20,500 stores in 90 markets worldwide. Now let's look at the price action. Starting with the 1-year chart, we see that Domino's Pizza had a CAGR of about 48%. Zooming out to the 5-year chart, we see that Domino's Pizza had a CAGR of about 11%. This is great share price growth, but will the upwards trajectory last? If we perform a backtest comparison of investing $10,000 in Domino's Pizza versus the S&P 500, we find some interesting results for Domino's Pizza. In that comparison with the S&P 500, $10,000 invested in Domino's Pizza would have grown to $21,189 or a 15% CAGR versus $22,796 or a 17% CAGR if invested in the S&P 500. This demonstrates slight underperformance for Domino's Pizza. A Domino's Pizza investment would have also been more volatile with a 33% standard deviation versus 18% for the S&P 500. Domino's Pizza outperformed the S&P 500 in terms of the best year performance, for which Domino's Pizza grew 48% versus S&P 500 31%, but underperformed in the worst year performance, where Domino's Pizza fell 38% versus the S&P 500 18% fall. In terms of max drawdown, Domino's Pizza fell 48%, more than the max drawdown of 24% for the S&P 500. Domino's Pizza did underperform the S&P 500 in comparisons using the Sharpe ratio and the Sortino ratio due to its excess volatility. Now let's hop over to market share and take a look at Domino's Pizza's market share. Here we have the dashboard, where we can quickly gather a lot of information at a glance. Expanding the dashboard, we can look under restaurants and see that Domino's Pizza is categorized under fast food restaurants. Expanding the fast food restaurants tab, we can see that Domino's Pizza is one of the smaller companies and does not appear to be growing. Let's look closer at the year-by-year changes in market share. So we come down here and type in the ticker symbol for Domino's Pizza, DPZ, and see that the market share is 0.47% out of the publicly traded food, beverage, and restaurant stocks currently in the market. Domino's Pizza attracts a much smaller proportion of food spend than I thought. The 5-year market share CAGR for Domino's Pizza is -1.58%. This means that Domino's Pizza is losing precious market share every year. If we start in 2019, we see that the market share was 0.52%, 0.57% in 2020, 0.52% in 2021. 0.49% in 2022, and 0.47% over the trailing 12 months. Consumers are choosing to spend less and less at Domino's Pizza. In this version of market share, we can also compare Domino's Pizza with other companies or entire industries. When we type in the ticker symbol for Papa John's Pizza, we can perform a head-to-head comparison of the market share data for the two pizza restaurants. Domino's Pizza holds a 68% share of the two restaurants' revenue. However, Domino's Pizza is actually losing market share to its pizza competitor, Papa John's. This bodes poorly for Domino's Pizza investors. Let's take a look at the fundamentals to learn more. Gross margin is 28%. This is on par with expectations. Revenue has compounded at around 5% over the past 5 years and has reached over $4.48 billion most recently. Sadly, it looks like even though nearly everyone loves pizza, Less customers wanted it from Domino's Pizza, as we can see a decline in revenue from 2022 to 2023. Ouch. Looking at cash flow, we see a 4% CAGR over the last 5 years for operating cash flow, while capex has worsened at a 5% CAGR. As a result, free cash flow has grown at a 4% CAGR. Cash flow has been bumpy over the years, though the company still produces just under $500 million of free cash flow per year. That is not bad at all. Weighted average shares outstanding have fallen over the last 5 years, going from 41.9 million shares in 2019 to 35.4 million shares most recently. Domino's Pizza has been buying back a lot of shares. This is one of the big draws for Domino's Pizza investors. However, we can clearly see that the rate of buybacks has slowed recently. Now let's view return on invested capital. Return on invested capital has fallen from 66.7% in 2019 to 52.7% in 2023. It must be said, Domino's Pizza has some of the best returns on invested capital I have seen in a restaurant. Management is operating the company in a very efficient manner. Another favorite metric is cash conversion cycle, a measure of operational efficiency regarding supplier and payer leverage as well as inventory control. Going from 13 days in 2019 to 20 days most recently, Domino's Pizza has gotten less efficient over time. Unfortunately, Domino's Pizza is getting paid later and later from its customers and pays their suppliers earlier and earlier. This trend is not good. Now, let's look at Domino's Pizza's debt. The net debt to EBITDA has fallen over the past 5 years, going from 6.2 in 2019 to 5.8 most recently. While this debt level is high, I have come to view this as more favorable than in the past. We will come back to this idea a bit later. Last, let's explore dividends. Current dividend yield is 1.2% with a dividend payout ratio of 33%. Domino's Pizza is paying out dividends that its earnings can support. This indicates that the company's dividend practice should be sustainable. Dividends per share for this company have grown at a 17% dividend per share CAGR over the past 5 years and a 20% dividend per share CAGR over the past 10 years. The rate of dividend growth has slowed just a little over time, but 17% is still pretty good. The fundamentals of Domino's Pizza are mixed. In any event, should it be added to the portfolio? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. Okay, let's go to the spreadsheet and write out some key values for Domino's Pizza. It is a restaurant company with a gross margin of 28%. The 5-year revenue per share CAGR is 9% and the 5-year free cash flow per share CAGR is 9%. This is good but not great to see. A return on invested capital of 53% is excellent. Next, the cash conversion cycle of 20 days is okay, but I would like to see this value much lower. Domino's Pizza clearly has work to do in negotiating their sales and supplier contracts. Concerning debt, a net debt to EBITDA of 5.8 means that it would take Domino's Pizza nearly 6 years of earnings to pay back their debt. Whoa, that is a lot. So from a fundamental standpoint, Domino's Pizza again looks really mid. Now let's switch our attention over to valuation. Domino's Pizza is overvalued relative to the S&P 500 with a ratio of 1.2. The price to earnings growth, or PEG ratio, is 2.8, indicating that Domino's Pizza is overvalued relative to their projected earnings growth. Domino's Pizza has been such a phenomenal growth story since their IPO, returning 20% annualized. This is despite undergoing a 48% drawdown in 2022 and an 87% drawdown during the Great Financial Crisis. Still, consumers ordered pizza and the company leveraged efficiency to turn that revenue into profit and grew the share price. In my opinion, the management at Domino's Pizza does two things extremely well. The first is that they use debt better than any other company I have seen. With a total debt of $5.21 billion in 2023, management only paid $197 million in interest expense. This means that the total debt has around a 3.7% interest rate, which is extremely favorable in today's setting of 5+% rates. In addition to the cheap debt, Domino's Pizza uses it very efficiently with a 53% return on invested capital. This means that for borrowing at a 3.7% rate, management can then use that debt to generate 53% returns by investing in the business. This, I think, is the secret sauce for success at Domino's Pizza. The second thing they do well is capital allocation. Here we can see the free cash flow and share buybacks over the past 5 years. Despite having slow growing and highly volatile free cash flow, Domino's Pizza optimizes capital allocation by buying back shares opportunistically. In 2019, the company produced $411 million in free cash flow and spent $705 million on share buybacks. As we can see in the share price chart, 2019 provided a buying opportunity with the massive share price dip in August and September. Similarly, in 2021 Domino's Pizza produced more free cash flow, $560 million worth, and spent $1.328 billion on share buybacks. Again, the share price chart shows March to have been the prime time to buy back shares. This gives me a lot of confidence in the capital allocation ability of the management. However, the issue of growth, or the lack thereof, still remains. In order for Domino's Pizza to be the best it can be, they have to restart market share and revenue growth. Here we see the US stores revenue and the international franchise revenue over the past 5 years. While US stores revenue accounts for 82% of the revenue, it is slow growing at a 2% CAGR. On the other hand, the international franchise revenue is growing at an 8% CAGR. Clearly, Domino's Pizza should focus on international growth as the domestic market is likely saturated. Despite the strong operations for the company, a lack of market share growth is a red flag for me, though this might improve with further international expansion. For me, Domino's Pizza is not going on the watch list. Many thanks for watching. What do you think about Domino's Pizza, and please be sure to let me know what other companies you want analyzed. Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now and don't forget to put your money where your mouth is.